Hello, everybody, and welcome to the monthly edition of the Plus3 Futures and Commodities show. Today, we're going to be doing our once a month review of the bigger picture 10,000-foot view of the monthlies. I know this is one of your favorite things to do, Barry, because it gives you that clean perspective.
I like it, and I think I might have to do it once a week to look at the monthlies just to get we were just talking about this earlier. It's so easy to forget the monthly when you get sucked into the daily and the intraday price action, right? So
No question.
This is really important to do.
It shows you that, where the tailwinds are, right? And that's the key thing is you'd like to not be trading against these major big trends that you see on the monthly.
Yeah,
anyway.
and also to know where the big support resistant levels are, right?
Absolutely. And the poster child for risk, as we always say, is Bitcoin in this cycle. And the Bitcoin monthly, when we were talking before we started the show, it really has done a fantastic job of framing the price action in an extremely volatile asset. And right now, the key point here is this half square, and that's roughly around the 43,000 level. And you can see the wicks that you get on this current candle. The bulls know they can't lose that level, because if we lose that level, we're going down here. We're going down to 29,030. And sort of right now, this is the balance point. But if we lose it here, I think the odds really strongly favor we're going to go test this level.
Mm-hmm.
From a timing standpoint, it's also, we were looking at the timing here. The full squares and the half squares have been pretty good, in terms of kicking some moves off. The next big timing on our square here is June. And tidying this up and tying it together with some of the cycle work we're doing, that area is significant. So we'll see how it plays out. That's obviously bigger picture. We're 6 months from June. So all in all, the Bitcoin, the weight of the evidence looks down. It looks a little heavy to me on this monthly view. What's your perspective, Barry?
Yeah, looks a little heavy. Really depends on the half square there. And I think it would be healthy to get about a 50% correction. So, that 30 looks like a magnet almost.
It does, doesn't it?
Yeah. And so we'll see. And I think, but if that half square goes, on a weekly or daily basis, then I think we can look forward to new lows, taking out the 2021 lows, right?
Absolutely. Yeah. And I know you like to find balance points on charts a lot of time. Look how this balances the whole chart.
Exactly. It looks good.
Yeah, you got a square above, you got a square below, a little bit of deviation here, a little bit of deviation over here when it first started.
But, and of course, if we, manage to hang in here and next month we end up above the half square, then of course we're probably done, right? We had a 3-month correction, and 90 days is pretty much 90 days. So that's a decent correction. And if you look at that first high, we also pulled back for 3 months, right? Roughly 3 bars.
Mm-hmm.
So, you got to be ready on both sides.
Absolutely. Let's jump to the next one. Here's the NQs. This has been the stellar performer in this latest leg of the bull market, since the COVID lows. And a lot like it's on the daily, it's been struggling with this level up here around 16,000. We currently we're under this 15.7, 15.8 area, which on the monthly is key.
Right.
And the slopes here, as we talked about before, as you get steeper and steeper, it's harder and harder to hold that trend. So it is late in the game, and I think NQs are vulnerable here. How's that for verticality?
No, boy.
This one, the thing that jumped out at me on this one is not just the angle of ascent, but the timing that's coming up. This is March. This is the month of March. Big big timing on the half square.
Right.
The timing here has been pretty good.
It's a very good square. Well, it's a square 52, so it's in there. It's good. It's a good square.
Right. So here, the price wise, the key spot on a monthly basis is around 45.25.
Mm-hmm.
If we lose that on a monthly basis, you got to figure we're going down to the full square here, which is about 4,100.
Right.
So that's the equity indices. Anything else to add to ES?
Well, I do see that full square up there. I mean, God knows if we can do that, manage that. That would be a hell of a thing to tap that and then call it a day.
It would be so sweet if it did it in March.
That would be epic, right?
Yeah, it would be a nice signal to trade off of.
So that's there, but we'll see. We'll see both sides. But I think the half square again, the way we look at these things, half square is a key point to watch right now.
Absolutely.
On a monthly basis. On a monthly basis, right? So
yep. Here's one that's sort of the invert of the equities, I think, right now. And a lot of the commodities. This is the 30-year treasury. We've been moving down off of a really good timing line in early 2020. And we just recently broke this trend line. And this was an important trend line, man. This was from the 2018 lows. Caught the 21 lows, caught another low in late 21, held it, and now we just gave it up this month.
Yeah.
To me, this looks lower and it looks vulnerable.
Yeah, it looks like a new start. I mean, broke the triangle. It looks unless we're completely insane, like something really crazy is happening, meaning we're getting into a sort of a long range consolidation here.
Mm-hmm.
It really looks like we're going to go at least test the lower trend line at a minimum.
Yep. The half square is at 47.5, basically.
Yep. Mm-hmm.
And then the trend line is like another eighth down, around 42.
So that all looks very open. The upper trend line held. So barring a consolidation, I think we're probably heading down. It's a lot of momentum pushing down. Look at that.
Yep, absolutely. And not to freak anybody out, but a simple ABC here.
Yeah.
Targets down around here, 125 area.
Mm-hmm.
It's possible.
Well, we've been there.
Yeah, not too long ago. So this looks weak. Now let's go check the grains, and we'll start with wheat. And I want you to notice the pattern in a lot of these commodities. When Barry and I were reviewing this before the show, we were talking about how they're all in a similar pattern, but different stages of the pattern. Some are, in a strong move higher, some are consolidating, some are coming out of the consolidation, some are in the middle of the consolidation, some are in the beginning. But there's this pattern of a consolidation after a good, strong move that's setting up the next move higher. And wheat, is one that's demonstrating this pattern. We had a low, a push up, pull back, strong move higher, and now we're correcting in this sort of, while it may look like it's sharp, if you look at the price, where prices come from, this is really, kind of a sideways correction, on top of these highs that made in 21. So this one looks to be entering this corrective phase, kind of entering / in the middle of it. So it may have some work to do before it takes off and goes on the next move higher.
Mm-hmm.
But if you look at where the price action, where we've corrected to on the way up and how we're pulling back, I mean, you can't say it's anything but bullish. We're holding the square. We're above this entire structure, this whole base structure. And just essentially in this area of, the last highs we saw in 13, 14.
Yeah.
What else jumps out to you on the wheat chart?
Well, I think trying to be patient with these,
yeah,
waiting for the pullbacks to finish up. And this one looks good, just very clean. It's a matter of waiting.
Mm-hmm.
And we catch all of these on our weekly podcast. So, one way to do it is we watch them every day, we watch them every week. And once we get to good support, that's when we start acting on these things.
And a little side note too, every single commodity we're going to review, except for cocoa, is in a super bullish long-term position. Based on some proprietary indicators that we use, they are in a strong bull market mode. And so depending on where they are in that move is, as Barry said, sometimes you pick it up on the weekly or the daily that, okay, the consolidation's over, they're moving. On the monthly, it looks a little choppy in some of these patterns, but the bull trend is there.
Mm-hmm.
Let's jump over to corn. And you can see how corn's a little different than wheat in that it's kind of had a full correction. Like you can see, this is about 4, 5, 6 months down. And look at that timing hit too, right on schedule. Right on that timing line. And we started moving up. So this one, corn, along with soybeans, look to be done with a correction and now starting to move the next leg higher. Same basic pattern, right? A base, a breakout. Now here's the pullback, and now we're starting to move up on the next leg.
Mm-hmm.
So corn is, I think, in the coming out of its correction that may have ended like around September of last year. Similar pattern as corn, huh?
Yep.
We had the breakout, had the pullback, had the timing line, really got things going, and now we're heading back up. I mean, I fully expect corn and beans to take out these highs and, challenge these all-time highs we saw earlier in the decade. But the pattern here is good. It's just it's a little further along than wheat, sort of in the same spot as corn. Let's take a look at the metals. Metals are in a different pattern, but it's one of, again, consolidation after a big move up. This is gold, of course, made highs in 2011, had a pullback, and then we had that last bull run that ended in the summer of 2020. And we've been pulling back in a frustrating pattern for both bulls and bears for the past 18 months.
But very bullish, look how, how high the lows are.
Mm-hmm. Look where they're all coming in, not only on the half square, but look at where they're coming in at the previous highs, essentially.
Exactly.
That high range.
Right. So we really it wasn't a steep correction or it wasn't a done deal. We're still up here. So it looks like there's more to go, I think.
And we're also seeing, and you can even pick this up on the monthly. Look at this series of higher lows starting to come in on the monthly. Right. And we're starting to get that curl that you like to see in a bullish pattern. If we can break out, I mean, I think on yesterday's weekly show, we were talking about that 1835 area, 1830 area is key. It's right there. Mm-hmm. Break out of that downtrend. This thing's going to have some energy built up behind it. Here's gold's cousin, silver. A really bullish pattern here because we're seeing this really strong support on the square and on top of this huge base that it's set, for 7 years, roughly 6-7 years before breaking out.
The nice thing with the silver is it's very clear where the support is. So
absolutely,
and that's, it's around support and resistance that you want to take action. So here, what do we got? 2008 highs. We have 2016 highs, all nicely 8 years apart.
Yep.
And here we are right on top, retesting those old highs, right? We're sitting on top, very bullish.
Very bullish. Yep. And this, again, is another nice consolidation pattern where once we break out of this triangle, we should say the next leg is going. And I think it's going to challenge these highs, and $50 is in the cards. If you look at the moves it makes basically 2 square moves. If we go 2 squares from here, 53, 54.
Well, even a simple ABCD would get you up near the old highs. So
that's correct. Again, copper had a nice big move higher, and it's been consolidating and correcting for almost a year now. Frustrating bulls and bears together. But like Barry was talking about, look at 2 things here. It's consolidating around the square,
Mm-hmm.
and it's consolidating around these old highs in 2011. That's not bearish. Now, what would be bearish if it broke down, came back, and couldn't get back above the square? Then we'd have to sort of change our tune. But right now, this is bullish.
Mm-hmm.
It's just a matter of waiting for time. And if we're looking at timing, June, July could be the next big move out of here, as it frustrates people for another 5 or 6 months.
Mm-hmm.
Who knows? It's possible. Crude's got an interesting pattern. Had this, plunged low in the COVID crisis when things went negative, had a huge rally since. And look at this. This is that consolidation I was talking about, and that sort of frustrating wave where things go up and down and up and down and nowhere. And so we may be doing this now in anticipation of the next break higher. The interesting thing here is look where the lows came in. Here on the full square, and here recently on the half square.
Yeah, I think I remember calling those out when we were down there. So
yep, yeah. I mean, these lows are sitting on top of these highs, and these lows are sitting on top of this high here.
Right.
And all this price action over here. So it looks bullish from a big picture monthly standpoint. Crude is bullish.
And breaking that monthly trend line, we're just breaking it. It's not even we haven't put any length into the leg after breaking. So
that's true. I mean, I think, looking at the monthly $100 crude, which we talked about yesterday on the regular weekly show, totally in the cards here.
Well, getting into that next half square up above, I think would be normal.
And that gets us to 100.
Yeah, a little bit above 100, right? 100 and something.
Yeah. Yep. Yeah, it's good. Crude looks good. Here's Crude's cousin, the Widowmaker, as they call it. It looks like we've done a perfect pullback right into support that sits on previous highs. Multiple price action in here. And now, as we were highlighting on the weekly, it looks like we could be ready to start the next leg up on this one.
Right. And, just to remind people, it's just, actually, I was thinking that we should do a video on how to trade these levels, or how to, make these talks, how to convert them into practical ideas, right?
Yeah, that's good.
And so here it's very simple. We have monthly pullback onto a square. And like I said earlier, the focus is, long as that low is holding, and let's say somebody has a system where they're getting buy and sell signals. Well, you just, the buy signals have a higher probability because, the monthly low could possibly be in, or the support is holding. So long as that's holding, you're getting, if your system generates long side trades, well, those are they probably hold their higher probability.
Right.
Right.
Those are the trades that have the higher time frame supporting it, and sort of the wind at your back type of trade.
Mm-hmm. And all of these, right? All of these, the reason for the monthly review is to see where those levels are. And if we're close to those are actionable. If they're not nearby, you wait for them to get by. And if they don't come by, well, there's nothing to trade there. So that's the general idea of a monthly review. See where the big picture levels are.
And where are we in the big picture move? That's right. Here's sugar. Kind of looks like nat gas, doesn't it?
Mm-hmm.
Not as big of a base, but similar pattern, right? We had the breakout, pull back, and now it's battling here at this half square. This half square to me is really important. This 1865, 1870 area, because if we can get back above that, it kind of opens up the full square to the 2350 area. The previous highs over here. But again, nothing's bearish about the chart. We had a strong move up. We've had a pullback. Now we're going to be watching on the daily and the weekly to say, okay, can we get a signal here where we can see that the shorter time frames are supporting the bigger picture view here. So still very long term bullish on sugar. And I told Barry, one of the things that happens to me when I do this sort of monthly review is a story starts coming out of the charts. And the story with the commodities on these monthlies is there's another leg coming. Different markets are in different phases of that correction. This, you can call it a fourth wave correction, you can call it second wave correction. They're all in some stage of that corrective process. So we're going to be really vigilant and really, really attentive to these charts, because since they've been correcting on a monthly basis, the next move will be a fast move on a monthly basis. And you want to be involved in the market when that happens. So that's what we're looking at. And that's the story that's coming out of these charts.
Right.
And it's interesting from a psychology standpoint too, because I'm sure people that jumped into the commodity train late are getting frustrated, right? Because they're either not moving, or they're going down, or they're chopping, and that's just what the market's going to do right before, frustrate the most people right before it takes off.
Exactly.
Here's cotton. Cotton's been one of the good performers, but you can see we had to move up. We had this really well-defined triangle, broke out of it. Now we're doing this sort of up and down type of corrective move. But cotton's late in the correction game, and may be one of the leaders in taking us out here. This level of around 124, 123, 124 is really important. Obviously, if we can clear that, sit on top of it, it's going to open up the full square up here around 150.
And here's another commodity, correcting and holding way above past highs.
Right. All these highs in here. Couldn't even get to it. That's bullish.
Also showing things aren't going to get any cheaper anytime soon.
No.
So
yeah, that's the inflation bugaboo it may die down, like I said, for the next 2, 3, 4, 5, 6 months, but it's coming back. The message from these charts is these commodities are going to be priced higher in the near future. Here's one that's interesting. This is the only one that's not 100%, balls to the wall bullish right now, but it's been in this major triangle for 6, 7 years now, and we're bumping up against the top of the triangle. So we have a series of higher lows. It's pushing, it's curling, it's doing everything that a bullish chart does. We just need to see that initial breakout and then come back to test the breakout, not a fake breakout like this one here that caught me last fall. But if it goes up and comes back, and then we can go the next time, this is going to be like what happened to the other commodities that broke out of those big triangles that you're seeing on a monthly basis. So cocoa is on our radar. We're watching it vigilantly on a daily and weekly basis, looking for the evidence that this move is going to be a breakout, and it's a real breakout that's going to carry it much higher. If you measure this triangle out, it takes you way up into the 4,000s, 5,000s for cocoa. And the last one, but not least, is coffee. Coffee we've been on for a while. Had a sweet move here on this breakout. And now we've been sort of chopping up and down for the last 2.5 months and not really going anywhere. Typical fourth wave action. So we're looking for, signs from the weekly, signs from the daily that coffee's ready for the next run and this consolidation is over. Again, if you look at where the lows are coming in, they're all above the highs from 2014, 2015, and way above this consolidation pattern we had for the last 6, 7 years. So this is again another very bullishly positioned market. Anything to add on coffee or any of the other softs?
Well, coffee, just again, same pattern. Look at the square line, the second square up. We broke out, holding perfectly above it. Didn't even get to the square. So these are, overall, it's just a bunch of bullish patterns. Is what I'm seeing. So
Absolutely.
let's just be aware of that as we get into the year.
And it's bullish patterns that are frustrating people because they're not making any headway. Like for the last 2 months, you can see price has gone nowhere. It's gone up and down, and we're basically in the same spot a couple months ago.
It's a correction on a monthly basis, right?
Yep.
And I mean, I remember daily or weekly we squared out. So sure enough, we have a little bit of a correction. But the thing is, look, correction didn't even get near 200 or anywhere close to that. So to me, it's very bullish because of that, because of the fact that the correction was so tight. And again, now it's positioned to take out that half square and probably go challenge those old highs.
No question. Yep.
And
so I think the overall theme we want to leave you with is that the commodities are very bullish. They've been in corrections or are correcting, and we're vigilantly watching them to see when those corrections are over to get involved in the next leg higher and the next fast move higher. The equity indices look really extended and like they are on the precipice of something. We're watching there. We're very attentive to the fact of where we are from a timing standpoint as well as a price standpoint on the equity indices. Bonds are full-blown negative, so we're on a bigger picture where we see the bond prices going down and rates going higher. Anything else you got to add on any of the other markets, Barry?
I think we did a good cover. That's short and sweet, but to the point.
Yeah, and these months. Go ahead.
If anybody has any questions there, feel free to leave a comment. And if you like but leave a comment, even if you have a question about things, we can, make a short video, or we can, cover it again on the next month, like add some new feature or explain something. And if you guys like this, of course, like the video and maybe share it. It would be nice.
Absolutely. Ring the bell.
Yep. Ring the bell.
Do all the YouTube things. Anyway, this has been our sort of 10,000 foot monthly view. We hope you enjoyed it, and we'll be back at it when we have the new monthly bar next month. Otherwise, we'll be active on Twitter and of course doing the weekly videos. So have a great week, everybody, and we'll talk with you soon.
And thanks, Ben. Nice coverage, nice and tight to the point. So we'll see you later.
Thanks, Barry. Bye.